What's up? I'm Dan Fredenberg, and this is another chance encounter.
Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building.
I'm joined today with Chris Bounds. How you doing today, Chris?
Doing great. How you doing, Dan?
I'm fantastic because, after all, my very favorite audience member is joining us here today. And why is my favorite audience member here? It's because this is a chance encounter where I interview commercial real estate investors, syndicators, people like that. And why would I do such a thing? Well, if you know how private off-market deals work, they're often 506B raises, and you have to have a prior documented substantive relationship, or else when the SEC ends up auditing you after you get to a certain number of assets under management, you will be in a bunch of trouble. So you have to have that documented, and that's what we're doing. But the more important thing for you is I want to make sure that you learn how to effectively communicate on the subject of commercial real estate, and you understand how my guest fits into these deals. But before we get too into the weeds about the deals and what we do, Chris, you want to say a thing or two about yourself before we get started?
Yeah, sure. Chris Bounds, Houston, Texas. Flipped 200 houses, investment fund manager, real estate investor, top agent, growth leader with eXp Realty, and endurance race enthusiast.
All right, awesome. That's a great background there. So the first section that we go through in every episode are the 5 distinct motivations. Before that, I gotta say, but wait, check your 8. Chris, I don't know if you can see through the camera and like into the user's device, but down there might be this hideous red subscribe button that they should probably do something. Okay, it's just a joke that I do in every but the 5 distinct motivations, I've met all sorts of different investors and syndicators. And one of the biggest things on my mind is how can I be sure that this person's actually going to follow through with it? After all, it can take months. There's all sorts of different risks involved. And so I need to make sure, what exactly is it where I can categorize your unique why under these different motivations. So I go through them in every episode. The first one is preservation of purchasing power. So some people out there, they have a portfolio of assets, and the way that they make ends meet is from the proceeds of ownership. So when they are going to be making a new acquisition, it's going to be because inflation is wearing away at the purchasing power of the cash flow, or it's because they're buying at a steep discount, or there's an asset crash, and that's why they're scooping things up. But that's not me. That's not the reason why I'm doing it. The reason why I'm doing it is because I'm trading time directly for wealth. So my background is in tech. Specifically, it's the CRM industry, which is for mass emailing and creating online web funnels and accepting online transactions. And I was doing that for real estate since 2014. But what hit me as I was watching my boss was, here I am, because I'm a high salary, high wage earner. I'm paying more in tax than anybody else. So I thought, how can I pivot where I am rewarded in the form of deployed capital, AKA equity, instead of paying tax first and then investing whatever's left? So that's why I'm doing this. But a lot of people, especially youngsters, when they get into the industry, the reason why they're interested in getting involved in these commercial deals is because they want to take back control of their schedule. And maybe that means work fewer months per year, but maybe it means that they want to fast track their retirement. But regardless, it means that they want to scale back at some point. But that's in stark contrast to the next group, where ambition is a lot of the reason why they're doing what they do. They want to buy up their entire hometown. They're after that generational wealth. They want to make sure that their great grandchildren never have to hold a day job. And that's why they're making acquisitions. And they're fantastic because they're going to be hustling into their 90s. That's also very similar to this last group, But the differentiating part is they have found a sector of society, or maybe it's the environment, or maybe it's animals. Who knows what it is? But they really have found out that you need a substantial financial backing if you're really going to make that big of an impact. And that's why they're making their acquisitions. So, as far as you go, Chris, of those 5 different motivations, what combination of them would you say describes you best?
Yeah, no, I find it very troublesome when you have folks that are trying to save for retirement. They're working their job and they're doing it the traditional way, and they get very frustrated for whatever reason. Maybe it's not producing the returns they want. Maybe they're just paying a crap load in taxes. Maybe they hate their job and they would love to be able to do something else on the side or full time, like real estate. So I really enjoy educating folks about the power of real estate, the power of investing, whether you're going to do it as an operator or passively, but educating them on the benefits of real estate investments, and how they can weave that into their overall plan. Because not everyone wants to buy their whole town. Some people, they just want to invest in other people's deals throughout 10, 20 years and then have a multi-million-dollar portfolio that they built passively.
I love it. I love it. And that brings me to my next question, which is the tolerance of risk assessment. And the reason why this is part of the show is because if you've ever filled out any of the questionnaires the securities attorneys insist that you fill out to be part of a 506B deal, I found that the one question that I just don't think it provided reliable answers. It was the one towards, how much risk you can tolerate. And the way that I solve it instead is this fill in the blanks question. So, Chris, there are many popular investment asset classes, but I think blank is too risky. You can use something related to real estate or outside of real estate, but what's too risky for you?
The one you don't know about. Or, and I'll add an extra layer to that. The one you know, but you don't know a lot about the person running the deal.
Exactly. I love it. Understanding is definitely one of the most important parts of this. And that brings the wonderful segue here that is super duper intense. Another reminder to get people to subscribe. That thing just kills me. But this section, I pull out the Dan Does Deals Core Competency Cube. And the purpose is it's got the 6 different roles in a commercial deal. And the reason why I go through all 6 sides in every episode of Chance Encounter is because I want to make sure that you can effectively communicate on the subject of commercial real estate. But I also want to make sure that you understand how my guest fits into those deals. So I take a couple minutes and go through all the sides. It's super fast and super informative. So let's first talk about what a repositioner is. A repositioner is an acquisitions person. They're looking at a bunch of different properties and they're doing a bunch of paperwork. Now, what is this paperwork that they're doing? Well, there's a fancy word for it. It's underwriting. That means they're doing the math. They're figuring out, first of all, is this property actually even making the amount of money that the seller/broker claims it is? Because there's no guarantee there. But the reason why I call them repositioners, a lot of people call these guys investors and these guys investors and these guys investors. It's not very clear. The reason why I call them repositioners is because what they're trying to figure out as they're doing these acquisitions is how can they make a big difference in how the property is run. In other words, finding some upside. So they're figuring out how to make those changes. And one of the big parts of every repositioner's business is investor relations. In other words, meeting a whole whack of financiers who are people who only deal with paper and money. They do not actively get involved in the deals. But you have to have these financiers in your circle, because if you can get a more advantageous loan, that goes straight to the profitability of the property. So that's why the financiers are a big part of it, even though they're not doing the work. But usually the repositioners, that's not going to be enough to really make it profitable. The next place they're going to look is operations. They're going to stop those Benjamins from going down the toilet there. But of course, there's a lot more to operations than just unclogging toilets and mowing lawns and collecting rent. Like, one thing for me personally, like even when you get to the 100+ unit apartment complexes and whatnot, people are frequently outsourcing their operations to a third party. So somebody like me on the GP team comes in handy if there's a vacancy rate problem, they're having troubles filling all the units. You need some serious marketing chops, which is one of my fortes on top of all the automations and figuring out all the project type planning of that. But of course, operations, that's probably not going to be enough because commercial real estate is so competitive. So the next thing the repositioner is often going to do is they're going to get a contractor team involved to do a value add or renovate the units, improve the units so that the next residents will be happy to pay more in rent than the previous one, which is upside in itself. But of course, you can spend endless amounts of capital on these different improvements, but that doesn't mean you're going to get a good return on investment. And oversight is going to be one of the big names of the game when it comes to making these improvements, making sure that they finish on schedule and they don't go over budget and all that kind of stuff. But if you have the same problem that I do, see, I don't know if you know this about me, but I'm from the internet. So that means I need locals. I need boots on the ground. I need somebody who can be there in an hour or two, because that will not be me. I would still be stuck at an airport in an hour or two, even push comes to shove. So these boots on the ground, these locals are super important parts of the puzzle. But when the repositioner has found a property that they want to pick up and they've assembled this team, they're going to turn around to the financiers, the banks, the lenders, and say, hey, I've got, let's say it's a 350 unit apartment complex. It costs tens of millions of dollars. Say you don't happen to have, I don't know, tens of millions of dollars you want to lend us for this, do you? Well, the financiers are going to have one other big burning question that must be answered before it's going to go through, which is, who is the sponsor? Now, a lot of coaches and gurus, they really gloss over this side of the puzzle. And here's the scenario. Let's say you've got a circle of friends because you're a physician or an engineer or something like that, and you want to pool your resources to take over one of these apartment complexes. The big snag you're going to run into is the banks are going to insist that somebody in the fold already owns a similar asset. You can't be buying 350 unit apartment complexes and get a commercial loan without somebody who already owns one. Now, on top of that, you also need a certain amount of liquidity. And then among the ownership team, you need a balance sheet of at least the amount of the loan. But if you got all those pieces, you got yourself a commercial real estate deal. So, Chris, as far as you go in these deals, you mentioned being a realtor as well. So, I imagine you've got the repositioner parts to what you do, but I don't want to put words in your mouth. What core competencies do you expect to contribute to your next deal?
Yeah, and that's interesting because I've done most of them in the single family space. So when looking, and before we made the transition to multifamily, it's how can we add the most value? And I was looking at the same size of that block. I was like, well, this, I could do this, but do I enjoy it? Or, hey, I could do this, but would I be good at it? Or, hey, well, I probably just can't do this. And I'm talking about contracting there. It's like I can barely hang a picture on a wall. But at the end of the day, I'm raising 19 million over the years for my 200 plus flips. You found out that's where I could add the most value, working with operators, working with those repositioners, and bringing them the equity that they're going to need to bridge the gap between their financier, their bank, and the actual purchase price. All that extra money is equity. They got to be able to bring that. So that's where I come in.
Excellent, excellent. So that brings me to the ideal property next. So when syndicators, investors, and whatnot are asking about your ideal property or your buy box, we're really asking about three things. The first one's geography. Where's the property? So which states, which counties, possibly even which neighborhood? It's all going to matter. The second thing is the size. And generally on this show, I tend to interview the multifamily syndicators and investors and operators more than anybody else. And in multifamily, the way you define size is by unit count. And the reason it's so important is because you get a completely different type of group of people taking over 15 unit apartment complexes compared to the ones taking over the 150 unit ones. So that size definitely matters. But if you're in other types of real estate, it might be about square footage, but I still need to know the size. The third thing, though, is class. And one of my pet peeves is when people use one word in two completely different meanings. So I split class into two different words. The first one is condition, and that means how old is the building, how up to date is the building, how beat up is the building, and what about the luxuries and amenities? Like, is it a fancy place or is it, very, very bare bones? So that's condition. Now, the other meaning of class I call area. And what they're asking about when they're talking about area is, what's the crime rate like where the property is located? Where are the school districts like where the property is located? And then, of course, how many people go by the property on a given day? So that's the area. But both area and condition, the two versions of class, the way that they're rated is the same as in grade school, where you got A plus at the top and then A minus and B plus and so on. But Chris, as far as you and your guys' buy box goes, what's easier to say yes to and more difficult to say no to?
Yeah, when I bought a 29 unit many years ago, I said I would never buy one that small. Property management is really challenging with something that small. Also, financing is more challenging. So 100 plus units in primary and secondary markets of Texas and Sun Belt, primarily what we're looking for, with sub markets with long, really strong population and job growth. So over a 10-year trajectory. So as far as unit count, 100 plus units, generally value add or core value add or core plus is primarily what we're looking for. Although we're buying a core asset at the end of the month that it meets the returns we want because it has some unique features like a 3.25% assumable 40-year fixed loan. Mm-hmm. That's pretty nice. With strong operators. So we really, really focus on the operation team to make sure that they've got the operational experience, not over the last couple of years, but maybe over the last 10, 15, 20, 40 years, that with proven excellence to show that they can weather future storms that arise, like the one we're kind of in now, right?
Yeah. There's some grumblings going on, that's for sure. And but that brings me to my next question, which is what kind of people you've alluded in a lot of ways to the people who you can help the most. But that's the wonderful thing about commercial real estate. It's multifaceted, and so it's a big enough sort of activity that nobody's going to be all the sides of the die for any meaningful amount of time. But with our unique skill sets, we're better suited to help some people more than others. Me personally, it's the sponsors and KPs who I'm always most eager to meet. And the reason for that is because I've got this background in marketing, content creation, digital everything. And so as a result, I can make a bigger disproportionate difference to people like that because they've already got the foundation set up. Whereas a typical repositioner, they're best suited to get a grunt who can put in 80 to 120 hours a week building their business. And I'm the smarter, not harder type of guy. But the other group who I'm always eager to talk to are locals, the boots on the ground, because after all, I'm from the internet. Now, Chris, I don't know if you have any 506B deals going on. If you do, you're not supposed to entice investors, or at least specifically, you're not supposed to mention any deals that you're up to. But, as far as, I don't know what enticing an investor really even means. So if you have a donut, though, don't wave it in front of the camera.
Yeah.
It's very enticing. But who's out there? I know a lot of people say they're eager to talk to beginners, but who's out there in the audience who you're best suited to help?
Yeah, no, we primarily look to provide equity to operators who have experience, actually provide funding, whether that's equity placement or debt. Debt is more short-term gap funding. Equity is equity. So we look for operator, then market, then asset. Operator, market, asset.
I love it. I love it. So then the next question is how to reach out. And I've got this distinct last name, and that makes me pretty easy to find. My main social media outlet that I'm on is LinkedIn. So make sure that you reach out to me on there. But this QR code, if you scan this with your phone, that brings you to the FAQs page of 506B.me, which is the platform I offer, which is to document your prior substantive relationships for your syndicator and investor database. And the reason for that, as I mentioned earlier, is the SEC does audit everybody once you get to a certain number in assets under management. And the thing that they're going to be looking for if you were doing 506B deals is, like, are you actually getting to know people and understanding their level of sophistication, appetite for risk and things like that. And a CRM just generally doesn't it doesn't have a way to save that kind of stuff. It's great for saving email and phone numbers, but not, whether you're sophisticated or not. But Chris, as far as you go, is there a website to reach you, or which social media? Like, what's the best way to reach out?
Yeah, investedx.com. That's the primary holding company. We do two things. We do education through our Invested Agents brand. That's education on how to be an operator, whether single family, multifamily, or Invested Equity, which is the more passive brand. So that's where our real estate fund is held, where we work with private investors and put their money together to work in high quality deals with good operators. So investedx.com, that would get you on our newsletter, socials, and of course you can connect to the various brands that might sound interesting to you.
All right, perfect. And then the last thing that I have, it's actually not for you, Chris, it's for you in the audience. It's a public service announcement. And it's, if you've been watching this episode and experiencing like searing pains in your eyeballs and like migraine-like symptoms, I'm confident it's because of the hideous red subscribe button that's right there. And if you click it, it goes away. It turns into this gray one. You should see the gray one. It's really nice. And of course, the reason I want you to hit it is because if enough people hit the button, then YouTube will start paying for these videos instead of me. And I think that would be amazing. And as far as you're concerned, all it means is my videos may show up on your list of suggestions, but you can feel free to ignore those suggestions. Frankly, I just appreciate the fact that you spent this time with me. Just like Chris, I appreciate you joining me today. This has been great getting to know you a little bit.
Absolutely. It's been fun.
Awesome. Thanks.
Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay, are you already logged into 506B me?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506B me, everybody.